Saturated, that's what you assume.
We fixed it, ladies and gentlemen. We have fixed the issue.
I am conflicted, watching where I stand still, hanging in the balance of the life I want to live. I want to take it all, standing tall. Here I'm with the person you are. Oh, break out, I've got to see. Spent all my life holding all of it closely. I played it innocent, a feel of discontent. I'm finally facing it all, fearless.
What's up, everyone? Glad we fixed the issue. Holy crap. Holy crap, ladies and gentlemen. We have fixed the issue. I swear I was beating my head against the wall. For the last hour, I have been trying to fix this. All right, how's the quality, guys? Is the quality lower? I had to lower the quality of the stream. Okay. So hopefully it's not too low. But we got some things to talk about tonight, you know. Things we got to talk about. Okay. All right. Time well spent. That's right. So, ladies and gentlemen, first of all, we are going to have a new tradition. Let me know what the, yeah, exactly, Zachary. Round 3, fight. Like, I was about to quit tonight. I swear to you. Let me know how the quality is down below. If it's super, super low, I'll make sure to turn it up next time. But I had to, like, drop this. So, I have gigabyte, like, I have Ethernet, okay? I have fiber optic. And yet, I can't stream at the max quality for some reason. I don't know if it's my OBS or something. Like, I'm streaming like dumpster quality right now. Anyway, it's all right. All right. So, ladies and gentlemen, as people pour in, we are going to have a new tradition. That is going to be going over the quote of the day. Now, if it wasn't for such gargantuous circumstances, I would have selected it myself. But today, for July 30th, the quote of the day is all animals are equal, but some animals are more equal than others. I don't even know what that means, so we're going to roll with it, okay? But we're going to have a quote of the day from now on. That was just proof of concept, and I'm actually going to pick them. So I'll actually pick meaningful ones, but that's what it's going to be. So tonight, ladies and gentlemen, the markets are dumping. But are they? Are they actually dumping? Tonight, we're going to talk about a few different things. We're going to talk about, number 1, why the markets are actually going to pump. Number 2, where I think the markets are going to go next. And number 3, what trades are we going to find with it? That is our objective for tonight. And for most of you guys, thank you for your patience. This is an extremely late stream. But we are going to roll with it. Again, I had technical difficulties. I've been trying to go live for the last freaking hour. And that's that. So I am live. Come join. Scanning for 1,000% trades. Come join. Okay, let me just quickly tweet this out and then we'll get rolling here. How are you guys tonight? You are mandatory. By law, you have to drop how you're doing tonight. Let me know how you guys are all doing tonight. And I will quickly tweet this out and then we'll get rolling here. How are you guys all doing tonight? What did you guys have to eat tonight? Dude, awesome to see you live. What's up, Bears? How are you doing, man? Hope you're doing well. I think I'll be on Friday with you guys, which will be cool. Okay, where's Discord? Okay, here we go. Save, YouTube, live. Okay. Oh, the quality's not bad. Okay, we're good. Boom, boom, boom. Oh, I just saw your DM, by the way, Bears. I'll look at that in a minute. All right, all good. Good to see you guys. Thank you for joining me tonight. And again, I know it's a late one, but hopefully you guys are in a good mood and ready to work. So the first thing we're going to do tonight, of course, is we are going to scan for some trades. So what better way to scan than to start with the lo-fi copyright free and get some black box going here. So we're going to be scanning for the option flow first. For those that are new and you have no idea what option flow is, well, feel free to ask questions. But right now I am going to be scanning for what I believe to be valuable orders. So we'll check this out here. All right. Let's see here. Yeah, Sean shouted you out today. Looking forward to it. Let's go, man. Yeah, I sometimes watch those guys in the morning. I had surgery yesterday, so I slept in today, but we all good now. All good. Cod and catfish after hitting lifetime. Is your girlfriend named Lifetime? Like, who are you hitting? Big homie, what's up? 123 Wolf. What's good? What's up, Eddie? How are you, man? But yeah, so let's talk about this right here. We've got a few things to check out here. Pins, earnings. And again, for you guys that are new to the option flow, what I'm going to be doing here is I'm looking for orders that I believe to have influence on the markets. Certain orders, again, carry certain obligations to them, certain consequences, and we are going to be looking for these. Now this one's interesting on Moderna. So this guy bought the 109s, is that right? 122s. So he got the 122 puts. Interesting. Oh, they have earnings, never mind. Oh man, this CCJ is wild. I think they have earnings too, though. Yeah, yep. I'm too smart. All these look like crappy earnings trades. Now, see, Crocs is an interesting one. We'll talk about this. But Crocs, I actually think is going to pop. And I think it's going to drag Nike with it. So we'll take a look at this one in a minute. So you guys remember this one. I know it's an earnings trade, but we'll take a look at it. And then there's this one as well. USO. Oh man, that's a good order. Okay, we'll check this one out too. Okay, so if you guys are confused, Rader, what are you looking at, Rader? Rader, what are you doing? Why are you doing that, Rader? A few different orders I found. This right here is a hedge order. And we are already bearish on Citigroup. So we are going to do a case study on Citigroup today since I already have a trade on it. We also do have this USO and XOP. So check this out. We have XOP and then we have USO. So we have to go look at these two. Oh, these are tanking, aren't they? Can't type. I can't type. My fingers are too fat. Oh, that's not good. Interesting. So what was that USO order? Sorry, I'm not responding to you guys on purpose because I'm locked in right now. Okay, this is interesting. So we'll have to look at these two. All right, so first on the list, let's see. Am I about to leak my login? Hold on. I can't leak my Rader Trader login now, can I? Ladies and gentlemen, this week, we had a very important trade. One of the trades we are shorting, oh, I apologize, on the monthly report is banks. We are going short banks. This is a trade that I have to the downside. Now, why are we going to short banks this week? Now, and again, we'll start with the thesis since around 20 people are watching now. What is my thesis? You know what? Before we do all that, let's go over why the markets are where they are today and what do we expect. Well, first of all, actually, wait, okay. Everyone type in chat right now if you want me to run through the market synopsis. If you want me to bring you up to speed with the market right now, I need a yes in the chat. I need a yes, Rader, please, in the chat, and I will do it. If enough of you guys are actually interested, I will bring you up to speed with the markets right now. I will get you guys the up-to-date synopsis. You let me know. Yes, yes, yes. Rader, on the side note, you're handsome. Yes. Okay, so lots of yeses, some compliments in there. Thank you. Rader, how tall are you? Rader, yes, yes. Rader, we saw you dunking. Yes. Okay, cool. So you guys you guys want to see it. Okay. So we're going to turn off the lo-fi and we're going to lock in. First of all, what happened today and where are we going today? Over the last few weeks, we've been talking about one major thing in the markets, and that is a defensive to value rotation. And what that means is that, well, right back here around the 24th, excuse me, not the 24th, the 16th, we had a defensive in value rotation. What does that mean? It means it's firms, money in the markets was rotating out of growth and into defensives and value. This is what triggered the drop, or at least was the timing of the drop. As they pull out of money out of growth, they don't just sell that money and keep it in their pocket. They reallocate assets. Firms reallocate, and they started to swing them into defensives and value. During this time, growth in mega caps are the culprit or the most hit hard. These guys are the ones that sell off the hardest, and they suffer the most. That's what we've been experiencing. Now, from a structural standpoint, how can we use this information going forward? As the defensive and value rotation has been going on, and you know, has triggered this sell-off, where are we at currently in the markets? Well, we are right here. This was the chart that I brought on to. Shout out to people who saw it on Trader TV. But this chart right here is a summary of what we're doing in the market. Okay, I'm just going to copy and paste this. We're going to paste it here. This chart right here. Okay, so this right here was the seasonal chart that we made. Now, towards the end of July is typically when markets start to pivot to the downside. It's when selling pressure comes back into the markets, more specifically around July 30th or July 29th. Here, I'll give you kind of a look here. If you want to see this, again, this is on the Rader Report tool here. You can see that typically around the 23rd to 29th is the seasonal top for the markets. Okay, and using this information, we developed a chart. We developed this price action chart. Now, what is the importance of this? Well, we are in a 5-wave Elliott cycle based off of the structure. We set the seasonal top right here around the 23rd. This right here was the seasonal top. Okay, and let me just get the prices on here so you don't know. This right here is the seasonal top. So here's wave 1, wave 2, and now we believe we are in wave 3. However, things are looking to get a little spicy. Okay. So if you were to ask me right here where we are, I believe we are right here. So structurally, I believe we are right here at the midpoint, and we still have not started wave 4. Okay. I believe we still have more selling to do. Now, so we're in an Elliott wave. We have this chart. We set a seasonal top. When is this thing going to bottom? Well, I believe it's going to bottom around 520. And the alternative level is 532. Why those levels specifically? Those levels specifically are where the major put walls are building. And again, the most informational charts in the disk. What in the hell is this website now? This thing is completely broken. Oh my God, their website is completely broken. That's crazy. So real quick, why do I believe that the bottom is around 520 to 532? Well, we have two massive put walls building. The first biggest one is at 520. This is consistent across all indices. You can go check. It is at a similar level for QQQ. Not exactly, that, but obviously because they're different prices. But again, 532 is the second biggest level. So I'm going to be watching these two for a market bottom. Now, why would I not be looking at this one? I believe the 540 is already balanced. So again, I'm going to be looking at 520 to 532 as the bottom. All right. Now, moving on from this chart. So if you didn't screenshot that already, you can look at this chart right here. We had massive earnings reports, and one of those was Microsoft. In typical Microsoft fashion, Microsoft has sold up and is being bought back up at the open. This is not random. This is completely scripted, and I'll tell you why. SPY did not make a new low, and that's on purpose. That is absolutely on purpose why SPY didn't make a new low, because they want to drag this up to 552. Now, why would they want to do that? They want to go for one more big bait before the dump, and I believe that 552 is going to be that level. Okay, so 552, whether that's by Friday, if it is by Friday, count on Apple shitting the bed on earnings. All right, but we are looking for 552 this week. I still believe that the slow grind up into earnings is the best trade. All right, now, is everyone up to speed? So again, we set a seasonal top that is based off the seasonal data. Late July is typically when you see a market top. We expect selling pressure after the first week of August. All right. So I believe that this week, the bullish trade is going to be the better one, at least for the remainder of the week. All right. So I think that you will see some buying pressure tomorrow and into Thursday. Is everyone up to speed? Are you guys up to speed with this so far? So again, we've set a seasonal top. We're still in a defensive and value rotation. And I believe that 552 is the top for this week. Are we all good with that? And again, that 552 is based off some flow. All right. So I'm going to be saving my bigger short trade for 552. And that is because there was this order on SPY that was on the 552 strike. It was these orders right here. So this $3 million and this 164, I believe this guy right here is setting the top for the week. So this SPY 552 freight 2, this is the short level. You want to short off this level. All right. So now that that's out of the way, what are the key sectors in the market that we're going to be playing? Well, one thing I like to look at is, of course, the Koifin chart. So what we're going to do is we're going to pull up the Koifin chart, and we're going to go to U.S. sectors, and we're going to go to here. We're going to go to here. We're going to change the date to 2024, and we're going to change this to the 17th. Bam. Okay. So these are the sectors and their performance over the last, at least since the last market change. The last dynamic in the market, the last change in dynamics of the market, was on the 17th when we started to dump. You want to track the performance, the relative performance of certain sectors and industries from that. So I'm going to take from the 17th all the way up to now, and I'm going to see what has been performing the worst and the best, and that way I know what the leaders and laggers are. Why is it important to know the leaders and laggers? The leaders and laggers will help unlock more profitability. If you're trying to trade long stocks that aren't going to move, what the hell are you doing, right? So the idea is we want to find the stocks that are going to move to the upside the most, and we're going to find the stocks that are going to move to the downside the most. That is why you look at leaders and laggers. When market dynamics change, new trends develop, and you want to see which of those are the favorites and which are the least favorite. Anything in between is going to be absolutely mid. You are not going to make as much money if you trade things that are mid. Okay. So what we're going to do here is we're going to look at the different sectors. What has been outperforming? Well, of course, home builders, insurance, regional banks, utilities. All right. What you'll also see is real estate, financials, these type of names. So this is still a defensive and value rotation. I don't think this will last forever, but I think the best defensives to trade right now are the ones that are more beaten down. And those are going to be XLP and XLU to the upside. Now, what you'll also notice is these are rate-sensitive names. Do we all know what rate-sensitive stocks are in chat? Type in chat if you know what rate-sensitive stocks are. Let's see what you got. Let's see how smart you guys are. Yes, you're saying that SPY is going to have about 8% drop, 520 target. That's right, sir. XR Tizzle joined chat. What's up, young bull? So who is XR Tizzle? Yes. Okay. So what are rate sensitive stocks? Type in chat again. What are rate sensitive stocks? What do you guys think rate sensitive stocks are? Let's see what you guys say. What are rate sensitive stocks? Banks. Okay. In abstract, why are banks? Guys, should I just leave these Tom Cruise shades on to make the haters mad? Guys, imagine if Mixed Songs joined the chat right now. What would he say if I had these on when he joined the chat? What would Mixed Songs say if he joined the chat and he saw this right now? Do you think he would say, "Do I know anything about physics?" or anything like that? What do you guys think? Companies that banks, stocks that finance their operations. Absolutely. So read. For you guys that are new, rate-sensitive stocks are the stocks that benefit most from a less restrictive economy. They rely on leverage. They rely on financing to do business. These are companies such as Affirm. These are companies such as banks. These are companies more so of, the small caps, IWM. Why do you think IWM has been holding so well? These names right here are the names that get the biggest run-up into the rate-sensitive stocks, okay? Or excuse me, the rate cuts. The rate cuts are coming in September. That means that these stocks will get a run up into September, and that is going to be a lot of where the momentum comes in. Now, a lot of you guys think, well, wait, Rader, why are we not just waiting for the rate cut to then long these stocks? Because the trade is always before the news, guys. If you're trading and you're waiting for news to come out, you're not going to be in before the move happens. All right, so we're playing the run-up in rate-sensitive stocks. This includes solars. This includes things like home builders. This includes things such as small caps, IWM, Russell names. All right, so these guys right here are getting the biggest run-up. I believe there's still better. There's still a long trade in IWM. Now, how do we capitalize off this the most? Well, I'll tell you. Based off what the Koifin reads right here, I'm going to stay away from a few different sectors. I'm going to stay away from industrials. I'm going to stay away from technology down here to long. I don't want to long really any of this. My key focus is, number one, shorting home builders. I believe these are far too extended. Even though they're rate-sensitive stocks, they're far too extended. If you want to write this down, this is my trade thesis, and this is what I put on the Rader Report, basically. So let me go here. This was the monthly report that I just recently released for pro members. We talked about in this thesis that I believe at least the laggers are going to be the performers within the leaders. And what do I mean by that? As we near the late end of this cycle between the defensive and value rotation, so we've already had a huge run-up in industrials, huge run-up in these value names, banks. I believe that as we near the end of this defensive and value rotation, and I guess this is the best way to show you, because you're like, well, Rader, what do you mean near the end? So right here, okay? So this right here is the rotations. And what do you guys notice right here? What is down here? I want everyone in chat to participate. It's absolutely free. You guys gain absolutely everything and lose absolutely nothing in participating in this, okay? What do you guys notice is all the way down here? What are these three sectors right here? Okay? I like how my viewership went up as soon as I put these sunglasses on. Guys, do you think I should have a Lamborghini in the background? What do you guys think? You guys think I should put a Lambo in the background? Do you guys think I should change my text to most attractive 20-year-old trader? What do you guys think? You think that banks are going to take losses getting out of lower yield bonds? Let me explain some things in a minute, Wolf. I'll get around to that. You should get a 30K haircut on live stream. I honestly think I will, Wolf. I pay my barber around 40 to 50K per haircut because I tip. So that's what we're going to do. Weakening, lagging, and improving. Okay, so you guys nailed it. So these names right down here are growth sectors, okay? Now, when we talk about rotations in the market, what am I talking about? I'm talking about relative performance. Relative performance is one of the best ways to gauge what is happening in the markets, right? If you're comparing something to something else, you get an idea of, well, where's the money going? Right now, you see technology, which is right here. you see communications, and you see discretionaries. Now, they're not right next to each other like these are, but these are all growth sectors. These are growth stocks. These are stocks that are high beta, they're risk on, they're the companies that you want to invest in when markets are bullish, when markets are optimistic. Okay? These right here are not doing well. There's a rotation out of them. How do we know that? Well, again, you have to look at these bottom quadrants: weakening, lagging, improving, and leading. What do these mean? All these sectors right here are being compared to an underline. That's a fancy term for we're comparing all the sectors in the market to SPY. Okay, so we're comparing everything to the benchmark to see how they all are performing relative to the markets, right? If something is down here and lagging, it means it's doing worse than SPY, which means that it is lagging the markets and money is flowing out of it, all right? So what do you notice is up here? Well, you notice that these are the value, defensive, and of course, value and defensive names. Now, just last month, this is what the rotation looked like. Okay, so let me show you. How many days back on that RRG? Hold on. Okay, so when we did the monthly report for July, here's what the rotations looked like. Okay, so last month, or in June, right around July 1st, this is what this looked like right here. July 1st, this is what I posted. You can see how these were still in improving. That means they were early on in the rotation, right? And then this was early on in the tech rotation. We are actually nearing the end of this rotation. We are getting close. We are probably around 60 to 70% done with this rotation, okay? So this is the change. So you went from this to this right here, okay? So you went from this to this right, or you went from this to this right here, okay? So you see how much further we moved along from there. You can see this again. You can see it went up, 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 and now we're up here. And now things are starting to slightly curl down, all right? So that right there means that we are pretty late in that rotation. So what does that mean? Well, it means, why am I telling you this, is I'm actually looking to short some of these value and defensive names, at least the leaders, okay? The ones that got that huge run up, they benefited most, like home builders right here. I think these are going to start to decline as the laggers start to get a boost. And what I mean by that, I don't want to say laggers. I shouldn't have said that. What I mean is the stocks within value and defensive names, right? The sectors in here that didn't get as big of a run up during this rotation, right? The stocks that were kind of, we'll go long, we'll lead the markets, but they didn't get that huge pump. I believe those are going to get a huge benefit. And those names right now are XLU and XLP, so consumer staples down here. All right, I believe these ones are going to benefit most as far as the defensive names go. Okay, now when it comes to growth, I believe that the markets will continue to decline and that semiconductors are going to be the short. Yes, someone who bought calls in here, you might get lucky, you might get bailed out, but I believe semiconductors will continue to be the better short throughout the next month. What else I'm trying to short outside of growth back into value and defensives is banks. All right. So if I had to count on my fingers, banks, short, home builders, short, semiconductors, short. All right. Longs, XLU, XLP, maybe real estate if you want to get real slippery, but those contracts are suck and I can't really trade them. But for you equity traders, that's that. All right. And then also solars. Now, I've outlined all my trades again in the Rader Report. You guys can go read that. But I'm not here to gaslight you into joining that tonight. Of course, there is still the rate-sensitive trade as well. All right? So if I had to summarize all that yapping that I just did, I did a bunch of professional yapping. What you want to do is you want to stick to rate-sensitive stocks that did not get a huge run-up. That includes solars. That includes small caps like IWM. And that includes probably biotech. Okay? What do you want to long outside of the rate-sensitive trade? Well, you want to get into XLU and XLP, these two guys. All right? What do you want to short? You want to short growth. You want to short semiconductors. You want to short the leaders of that value and defensive rotation. Not the XLU and XLP, but you want to short home builders, banks, industrials into the end of the month. All right? So that's that. Okay, cool. So that is where we are at right now in the market. All right, so are we up to speed? Do you guys feel more informed? Do you guys feel like you know kind of what's going on? Okay, and the last thing I'll add is that between SPY, QQQ, IWM, and the Dow Jones, the best long will likely continue to be the Dow Jones and IWM until the end of the month. Okay, so I believe the IWM is going to be the more protected long. I think this one has more upside. So if we do start to rally tomorrow, please, please, please watch IWM. Okay, but of course QQQ as well is the second favorite. All right, are we all up to speed? Do you guys feel up to speed? Bro's so humble, 30K something light. That's right. I should get like a brick, like, yo, what's up? Just pay my barber. Hey, I got you, fam. So in case you guys are wondering, no, I'm not an idiot with sunglasses on in the dark. This is obviously a joke. I'm just keeping them on because you guys, I listed this stream as entertainment. So you guys are getting that. Are we all up to speed? Is everyone, type yes in chat? Type yes in chat if you guys feel like you are more informed so that we can proceed with finding trades and discussing trades. Let me know what you guys think. Moderna played out today, Evan. Moderna played out today. This gap up and push in the morning, that was the move. But it's, I mean, if you're still holding, you might as well hold into earnings. These glasses got bro acting different. Okay. Yes. Okay, cool. So again, to recap, we are still in wave 3. I believe there is still more downside, but I believe that we are going to go to 552 this week. All right. So if we go to 552 and dump off of that, you guys, by law, have to subscribe. All right. All right. So moving on from that, since SPY did not make a new low, then we are, again, still in wave 3. There's absolutely nothing holding us back here. But yeah, we are still around here. Now, the dynamic could change that if we go to 552 and dump back down, there is a potential that we are in wave 4. But we're gonna talk about that later. Now, trades that I found just now was these two right here. Now, on the Rader Report, this is a trade that we talked about, and this is going to be Citigroup short. Now, why would we want to be shorting banks? Well, banks, of course, received a huge benefit from that rate-sensitive trade, and, of course, that value rotation. So these orders came in right here. Now, for you goons in chat, this is 8, 9, $67 calls, and these are what? What type of orders are these? Let's see whoever's in the Discord in here, or whoever is a follower of the Rader Report. What order type is this right here? Is this a hedge trade? Is this a discount trade? Or is this a tag trade? Let me know down below. What do you guys think? I subscribed just now. Let's go read. Thank you so much. Hedge. So Ricardo says hedge. So Ricardo, so are you like cheating on the test? How do you know that? Okay. Okay, I need to stop. Okay, guys, listen. I'm a 20-year-old grown-ass man. Okay, sometimes I like to have fun, and sometimes I do like to participate in the memes. These glasses need to come off. You're a good teacher. Awesome. So Ricardo got it absolutely right. These are hedge orders. Now, what is a hedge order? A hedge order is when an option contract comes in. Okay, there's certain criteria with this. If you guys are in the Discord, you know it. If you read the Rader Report, you've seen a lot of them. Hedge trades, again, if you guys are confused, option flow is super, super important. Why is it important? Because certain orders in the options market actually influence the underlying. They influence the equity market. If you don't know what that means, it means basically, even though options are a derivative, they come from equity, right? Equity being shares. They're based on shares. They actually have the power to move the shares. How does that make sense? Because market makers balance the equity market around these orders, because these are presumed equity. Because if this guy goes in the money, there's consequences, right? If he goes in the money, the market maker may have to cough up X amount of shares to get him, to pay him out, right? Because he has the right to exercise and say, give me my 100 times how many other contracts I bought shares, and that's how many shares I want. That's what options are, right? So when you see a hedge order come in, now remember, options are a hedging instrument, but that's not what we're talking about here. We see a hedge order. This meets certain criteria. It's a shit ton of contracts. It's placed very aggressively. It meets certain premium amounts, etc. Hedge orders are inverse trades. You actually want to bet against them. The hard part, of course, is timing this move. But I believe since we are going to rally to 552, I think, especially since he got 8-9 expiration here, I think we have easily a trade entry later this week. All right? But since a hedge order has a lot of consequences, this is going to carry a lot of weight if the stock returns into 72, etc., or even over it. The likelihood of this dropping below it by 8-9 is upwards of 80-90%. Okay? So given the momentum of this, we don't want to be stupid. Given the momentum of this current candle, we are not going to short quite yet. We are going to wait for this to slow down. But C is certainly going to be a short into next week. Do you guys understand that? Do we all understand that? Because again, if this guy goes in the money, the market maker is going to have to cough up around 5,000 contracts, 100 shares each, at $67 a share. Let's do the math on how much equity that is. Times 100 contracts, or 100 shares, times roughly, I don't know what it was. It was like 5,000 contracts. Okay, so this is roughly $33.5 million worth of shares. That is presumed equity, okay? Now, on a stock like C, that's a lot of money, and especially for the derivative market, all right? All right, cool. So there's consequences to this order. Are we all good with that? Is everyone good with that? This kid is a good teacher. All right, so that's C. Now, you guys might be wondering, Rader, you don't know shit about what you're talking about. Rader, you've never traded hedge order before. Oh, really? Okay, let me show you guys examples so you guys know what I mean. All right, so we're just going to go to archives. Again, for everyone who's wondering, Rader, where's your P&L? Okay, the only people I share my P&L with is my mentors, God, and my mom. All right, but you can track all of my trades, all of my ideas. So if you ever question if I have no idea what I'm doing, go to here. All right, these are every single week. I publish these trades ahead of the week every Sunday. Okay, so I can't fake these. It's not after the fact. One of the trades was on July, I believe the 7th. This was one of our CVS. I want to say this was the CVS. No, it actually wasn't. I think it was July 4th. I apologize. 1 second. This will be a good case study for that hedge order for those that have not been exposed to this. Oh, yeah, here it is. Okay. So this right here, this is a hedge order on CVS, all right? So CVS at the time, and again, it takes a lot of discretion to filter these orders and find actually good ones, but we teach you that. I was taught this by mentors. If you guys wonder if I'm self-taught, no, okay? I'm not. But as far as this CVS right here, these are two orders, 7-5. Again, he placed these at 628. Very aggressive order, right? Only a week out. $59 strike, and he got this criteria meets hedge orders. Now, this is a pretty insane order. 500K, 6,000 contracts at the $59 calls. He places them at 59.03, right here towards the close of the day. Now, think about this logically. If this pumped, dropped, and then started to close right there in the middle, and he places this order, he is hedging a bigger position. All right? He is scared. Okay? But most importantly, we don't care about the emotions. This is a forced trade. The firm isn't making this. And you might wonder, well, Rader, why would someone ever place this order if they know it's instantly going to go against them? It's not that they instantly know, but they have to. Firms at institutions like hedge funds, things like that, or excuse me, people at hedge funds, they are, whether it's a computer or not executing these trades, they are forced to make trades because clients, the biggest money pool in the market is client money. These firms organizing all this money is client money. So clients want you to manage their money. They want you to hedge their risk. They want to feel like you're doing something. So these money managers, these computers, they're made to make forced trades. And forced trades aren't always logical. They don't always make out. That's why big money is not smart money. Smart money is sneaky money. This is not a smart trade. This is a stupid trade. But it's forced because they have to. They have to make their clients feel like, oh, look, we're hedging your order. It doesn't matter if it's going to go down or up. All right? But most of the time, it actually goes inverse to these hedge orders. All right, it's a forced trade. That's why it doesn't work out, because they're saying, okay, it's like this, okay? What's a good analogy? All right, so let's say we're coming to a stop and you're on a hill, okay? Whatever, you're parked on a hill with your car. They still have to pull up their parking brake. Even though the car necessarily might not go down the hill because you're in park, they still are forced to pull up the e-brake, okay? That's what their clients pay them to do. All right? So, based off of all that information I just told you, this order right here on CVS met the criteria of the hedge. Now, you short instantly. There's two ways to do it. Typically, I short 1/3 of position size instantly, and I add if it goes in my favor. If not, if it has too much momentum, in this case it doesn't, you can just do that. But right here, this one I wanted to short off this upper level right here on the gap fill. I thought that, this still has quite a bit of momentum. We could get some sort of gap fill there. So if we go and we look up CVS right now, you can see right here, this was the trade. So we came up, we did not reach that red area, but we did start to fall down. And this is exactly when I started to short right back into this range. This is the market makers hedging this order, absolutely clapping it. All right? This is the derivative effect. Okay? And you can see this thing just got absolutely slaughtered. And you can see on his expiration date, Friday the 5th, they absolutely clapped him out of the money. And then after he expired is when they could finally rally. Does this make sense, everyone? Does this make sense, everyone? You can see that after he expired, and again, I feel bad for people that don't understand options, because if you do not read the options market, you won't know these sneaky orders that are clapping your trade. If you just look at price action, you will be clapped. If you just look at your favorite pattern, you are going to be clapped. If you read the options market, and this is why I say it's the most predictive market in the world, it is the most informational market class asset in the world, not only because of the information it gives you, but also the leverage, you will know much, much more. Not only timing, but direction. How many people saw this CVS order and knew about it? Probably very little, and they didn't know the consequences of it. The consequences of it was you short any pump because it's not likely to break out. It mechanically cannot break out because of the consequences of that order. And you can see literally, and this is not scripted, right after he expired, Friday the 5th is when CVS bottomed, and then it started to rally. Okay? So this one order single-handedly clapped the CVS stock. All right. So hopefully you guys understand that. That's your little introduction to that trade. So the same idea here is on C. Okay? Now, if you're also wondering, well, wait a minute, Rader, how often do these come up? It's actually very often. In the same report, there was a BAC hedge order right here. There was a BAC order that was literally the same date. It was 7/5 placed on 6/28, and it was the same exact trade. They were hedge orders. And you can see right here, this is a put, so you would say to the upside, and the ball's on this guy to make it the trade of the week. The ball's on this guy. This was a hedge order, 39.5s. You can see he got slightly in the money, right? 39.5s, or at the money, whatever. This right here was a buy the dip trade or just simply play the breakout. If you go to BAC that day, you can see that this was kind of the trigger to start a massive move. You can see right then, the next day, you gap up and you have a huge surge to the upside. The number one thing that the options market helps you do is time the market. How did we know that this move wouldn't happen here? How did we know it wouldn't happen here? Because there was no option flow on it. Once you get derivatives to support your trade idea or give you a reason to validate that price chart, that's when you go and you stab at it. Okay, so because this hedge order came in, I took a stab on it. We took calls on that, and that thing went absolutely nuclear. I can't remember how much I got on this. I think it was several 100%. It might even be close to 1,000, but that was insane. I think it was 400%, but that's pretty nice. Okay. Who else knows this type of information? Absolutely no one. I will say this. My mentors who taught me, very professional people. I've been learning with them since I was 14. I met them out in the Bay Area. They are some of the most intelligent people I've ever worked with. I sacrificed basically my entire high school to work with them, and I guess that's what it gets me here. So I was not cool at party. I was not cool at parties. I was lame. I was a loser. I got really good grades though, and And I, that's just how it is. But there's no, and I mean this respectfully, man. There's very little people out there that know stuff, because very little people in the industry, at least what you see, what you're exposed to, they're not in it to actually trade. How many of these influencers or other guys actually talk about the markets? None of them, because they don't care about it, because they're not in the markets. I've got money in the markets right now. That is why I'm talking about them, is because I actually care, and this is what I'd rather do. I'd rather introduce people to real trading and introduce them to the mechanics of the market than sit here and flex P&Ls and say, hey guys, look at my nice car. Look at how you don't have it. You could get it one day, but if you bought my course, right? It's just, I'm not against selling courses. I'm not against selling data. I'm not against selling information. But when you make your entire brand, your entire existence in life just making money and not achieving something great in this life and not building a legacy, that's why my banner on YouTube says build a legacy. It's because in 10 years, what are these guys, what do they have built? They have a social media brand. Okay. Anything else? No. So that's what I'm trying to do. Anyways, I also get 30K haircuts. 1230 Wolf is my barber. I 30K every time he comes over. But that's that. So as far as other trades, we do have to look at that. Enough yapping. I apologize for all the yapping. Now, there is this order right here. So this is going to be an interesting order, and I'll tell you why. This right here is a pretty damn big order for the earnings. I don't actually think this guy will be paid out, but I don't care, because ultimately I have a trade right now in Nike, and what I care about more is Nike. Okay, now for you goons, you goober goon squads, right now I am in Nike. Who right now can tell me what structure this is right here in Nike, and I'll explain why Nike is important. Who right here can tell me what this is right here? Let's see what you guys got. I'm relatively new. 2 questions. What site do you use to watch flow? Where can I learn about the types of option floors like a hedge? Fit Twin Dad, we have extensive academic material in the Discord. While I'd like to say you could look somewhere else, there is nowhere else you can learn this stuff, sadly. Even Black Box Stocks, which is the website I use, they don't even really know how to read flow. Like, I can show you their alerts, and they're giving alerts for flow that's 9 months out. Like, what are you doing? Anyway, all respect to them, whatever, they have the best platform. This right here, the only reason I use Black Box Stocks is it has the best filters, okay? Now, this isn't a paid promotion. I've tried them all. It is the slightly pricier one, but the filters right here is the whole reason I use them, because 99% of flow is useless. You have to be able to filter them out. As far as the criteria, we have a bunch of PDFs and things like that, videos, tons of academic material. If you do join the Discord, or if you are serious about joining them, DM me on Instagram, say you're serious, and I'll give you a 50% off code. But other than that, you're happy to still engage here, or with the Rader Report, whatever. But if you are serious, again, DM me on Instagram, and I'll give you a 50% off code. And I'll also hop on a call with you once you do join and walk you through some stuff, get you oriented and on the right track. But as far as this stuff, yeah, hedging, we have a multi-leg PDF, we have a hedging PDF, we have a discount trade PDF, we even have a custom platform we built to track flow orders for the students that are serious about it. So right here, boom, this custom platform right here, you can just simply enter your order, and this will track it, how much it's down, the nearest put walls, the nearest call walls, etc. It's pretty cool. But this is a software we've created. It's pretty cool stuff, man. It helps me a lot out too, tracking orders. But let's see who is this right here. Who knows what this structure right here is? Accumulation manipulation. So abstract, did we choose to rhyme 2 words together and call it a day? What is that? What is you sound like Mickey Mouse Clubhouse. Okay, this is not rhyme 2 words together. What? What is? But hopefully that answers your question, Fit Twin Dad. Potential recovery flag formation for longer breakout. All right, would like a recovery flag number 2 for Nike. I remember it. I'll at you in Discord. Wait, are you already in the Discord? Twin? Are you a student already? Because if you are, I'll just send you the PDF or at least show you where it is. Rader, do you trade futures? No, I do not, but I do trade commodities in the options market. At least, you know, commodity names. Okay, so we look like we have no idea what this is. So I'm going to show you guys what this is. Okay, we're going to, again, the only reason I'm showing you this on the Rader Report is because, well, I don't want to go dig for the image. Okay, so we're going to show you here. Okay, so this right here is a market maker cycle. Okay, now we had people in chat going, Rader, how do you know so much? Who else knows this information? No one. Okay, so this right here is a market maker cycle. Nearly every single market bottom, there is two bottoms. There's a technical bottom, and then there's a liquidation bottom. Now, why do you guys think in every single market bottom, and this is what we've talked about before on the SPY, right? Every single market bottom. Why do you guys think that there is two bottoms? Why do you think that there is a technical bottom and then a liquidation bottom? Why do you guys think there is? Right? What do you guys think? Walk me through your thought process. Why do you think there's an initial fake out to the upside and then a liquidation? What do you guys think? Hey, participating is free. It's absolutely free. You guys have absolutely nothing to lose. Let's hear what you guys got here. And I'll throw in some music here just so y'all don't go to sleep here. Okay, let's see. Again, participation is absolutely free. You guys lose nothing for being wrong. Bro, I was right. Accumulation manipulation is not right. Get the least amount of people in the move. All right. Fifth waves that aren't supported. Okay, you're getting there. Max pain, trap shorts. Okay, see, look. We're getting there, guys. The IQ of this chat has risen by over 50 points in the last hour. I can guarantee you that. This right here is a market maker cycle. And why is it important? Almost every single market bottom has one. Why is that? It's because the options market is such an influence in today's world that they need to do certain price action moves to... okay, let me backtrack for a second. The narrative that there is an evil institution behind the scenes hunting your $20 stop loss is not realistic. Okay? So when you ask me, Rader, why do you defend this idea that there is no manipulation or there is no malicious behavior? It's because there's this weird thing that a market is a bunch of people thinking the same thing at the same time doing the same thing. All right? There is this weird phenomenon, and people have studied this and tried to understand it, and they can't, that people in markets behave the same. So all these market-making firms, all of these firms that are in charge of balancing the markets, dealers providing liquidity, they are trained the same way. So it's not that they're doing this on purpose. It's not that they're going and saying, let me go screw over everyone. But it's that these processes, the mechanics of the market, the gears always turn the same. They always turn the same. Okay? So when you see this right here, oftentimes you see a pop in the market towards the bottom. This is the most aggressive bounce. This is often when markets see a super surge, right? Right here, you can see that this is the technical bottom right here. You have somewhat of a parallel, but you see a really big surge off the bottom. That is not the actual bottom. This right here is to trap a lot of people. Now, when I say that, I say trap. Again, it's not malicious. It's just that the natural psychology of pile in, this is the bottom, this is the biggest move we've had in so many weeks, pile in, it gets too big, and then it flushes back down. They use up all of their buying power. Then after that, you have to go for what's called max pain, or the liquidation. This is the point of which there is the least amount of people in the market, where you see the biggest drop, the most aggressive, fastest flush down, and that is when the climax of selling happens. Once the climax of selling happens, the path of least resistance is to the upside. But markets bottom after liquidation every single time. Every single market bottom, a liquidation happens. Okay? Of some sort. So when we look at Nike right now, this right here, you can see a spring, max pain, liquidation, and then you see a move higher. Now you'll see this pink text says guaranteed to break the spring high. That's a pretty bold claim, Andrew. You're telling me there's guarantees in the market? Mechanically, yes. If it is a true market maker cycle, it will be guaranteed to at least break the spring high. That is how the mechanics work. Of course, if there's news, screw that. Okay? So if there's news right after the liquidation and you don't actually get one, that's that. GG. But as far as Nike right here, okay, so if we go look at Nike, hold on. Let me go look at Nike real quick. Okay. So if we go look at Nike, check this out. Okay. So right here, we had a parallel channel form. We had a spring. We dropped. We had a liquidation. And then we have a bounce back into here. Now, you can tell this is the liquidation by the instant behavior in how it behaved, right? So look at the buying behavior. You had one hit, two hit, spring. Then after the spring, you're expecting, okay, maybe we go liquidate now. This is the best time to liquidate. You liquidate and look at the change in buying pressure. You gap down, boom, big gap up. Come in, big up, right? So this is when you want to bet on the markets. This is mechanically the best time to bet on the market is when you come back into the range after the liquidation because there's the least amount of people in, is the path of least resistance. So I'm currently in this one. I'm hoping that Crocs, which is a consumer discretionary name, this becomes some sort of sympathy trade. So if Crocs claps the bed, maybe Nike pumps, maybe Crocs pumps and Nike pumps. But either way, I believe this is going to be a nice sympathy trade for consumer discretionaries, especially with Crocs earnings. So I'm going to be targeting at least above the spring high. Now, you can oil me up and crucify me if I'm wrong with this not breaking the spring high. But I believe this will, with 70% confidence, 90% confidence, break that spring high. Okay? So, hold on. Wait, I got to get to chat here. You guys need to join Rader Report in the Discord. I'm in both. I've learned more since joining my time trading stocks and options my own. Both are amazing service. Oh, I appreciate that, man. Yeah, guys, iShort's in here. He's been really doing well. His and I'll say this as openly as possible. Some people they get it better than others. Trading is for some people and not others, but I think iShort his username's in the Discord, iShort. He's very talented. He's getting the information. Really great guy. But as far as this, better investments than Nike. I've been trading for 40 something years, and this tech sell-off can last for a while. You're 20 years old, 68. Michael, respectfully, man, if you have any questions about some of the stuff I do, let me know. I'm not self-taught. I'm not some 20-year-old that doesn't know what he's doing. I sacrificed my entire high school to learn under people in the Bay Area, and I've committed a lot of my life to this work. So if you have any questions about how I trade, what I do, you can feel free to ask them. But if you're coming in here and hoping to tear down some walls, tear down my confidence, tear down positivity to release your own emotions and negativity, I would advise you not to. But again, if you have any questions over the material I've discussed and any questions about how I trade, what I trade, my ideas, you can always go and I publish all my game plans, all my trades, all my research on the Rader Report every single week. So if you have any other questions and you doubt everything I'm saying, go to the Rader Report. Everything is on there. And you can read these. I post these every Sunday before I take trades, before the market opens. And you can see how right or wrong I am. That's as best as I can advise you, or you can, of course, ask questions here. Oh, my God. All right, guys. So, Abstract, we need to ban evolving finance in chat. He donated and said, have you ever met Mike Hunt?
Oh, hell no, man. What the fuck? Huh? Oh, hell no, man. What the fuck?
Co-founder of JB Hunts. All right. So we're getting donated. In your 40 years of trading, did you not learn the lesson that you can always learn more? Damn. Stocks, chill out with that, man. This market will confuse many, but I've never saw you and I don't know anything about you. Okay, Michael, interesting. Again, man, if you have any questions, I'd love to tell you more about myself, what I do, how I do it. You can find my material everywhere. Trader TV, you can find me on the Rader Report. You can ask questions here. There's all of this stuff is public, man. You can go watch my previous YouTube videos to see how my predictions, if you want to call them that, or my analysis worked out, etc. I always posted a market summary videos, and you can watch that. But I'll say this, man, I know I'm 20. I get a lot of that judgment because of my age, and they say, well, how can you know anything? You're just 20. I've had exceptional teachers. I've had exceptional mentors in my life from a very young age, and I can't stress that enough, that age does not matter today. Now, of course, if you're trying to date someone, it absolutely does. But as far as a knowledge perspective and everything like that, a 10-year-old and a 90-year-old could walk into a forest. If that 10-year-old knows how to start the fire and the 90-year-old doesn't, who has more value? If they get lost in the woods, right? That analogy, very corny, very simple, but it's true, man. You might have more knowledge in other departments, and I'm sure you absolutely do have more wisdom in life than I do. I'm an immature 20-year-old at times. It goes both ways. To all the haters, please don't trip on the way out. It's a good comment. Thank you, Evolving Finance. Guys, can we get a shout out? Mr. Evolving Finance, his name is Sharkis, and he is one of my mentors. His name is Sharkis. And he runs the Discord with me. So if you guys want to pop into the Discord, Mr. Sharkis is one of my mentors. Go check out older videos and look at charts you want to. All right, guys. So moving forward with other trades that we're looking at. Now, one of the other trades that I was looking at. Okay. Now, wait a minute. Where's the money printer? Okay, headphone users, I'm sorry. I actually do apologize. I didn't actually mean to click that. We need like a money sound. So check this one out. This is XLU, baby. This one we have been eyeing for a while. Now, who was here in the last stream when we talked about XLU? This one I am currently long. This is a good one. Bro, ban that sound bar. I need to add more sounds to it, believe it or not. I'm going to do that tomorrow night. But what do you guys think right here? What is this trade a part of? Now, let's see who was listening. XLU. What is XLU a part of? What idea was that a part of? I'll give you a hint. It's right here. What was that trade idea a part of? Let's see what you guys see. Rader needs a Sharif mustache to go with them shades. Dude, I am trying to grow out my mustache. I have like a little hair here. I'm trying to grow it out. What do you guys think? Leading long XLU. Yes, but most importantly, this is a part of the defensive and value names. Most importantly, this is the second leg of that. We are in the final stages of the defensive and value rotation. And that is why I believe that XLU and XLP would get the benefit most, because those were the names that weren't picked up in the initial pump into value and defensive, right? So think about it like this, okay? Whenever you have these kind of rotations in the market, any rotations really, if you think about this as a 5-wave Elliott cycle, okay? In that first initial pickup, around wave 1 to wave 3, maybe towards halfway to wave 3, around here, this is when you get the humongous pump, okay? So this is when you get the huge pump, okay? And this picks up the leaders. These were names like XLI. These were names like XLF. These were names like Home Builders, ITB. But as we near that final stage, that final, 2/5 of that move, that's when you see the names that were kind of like, I don't really know if I want to move quite yet. A part of those get the pickup. These are XLU, XLP, these are these types of names. Okay, so that's what we're trying to capitalize off of right now, and I am currently in those. I think I was up around 90% at close, so hopefully I'm up close to 120, 130 by open. We'll see. But that is XLU. Okay. Now, another trade we are actually looking at is software. Now, software is an interesting one. CRM, these type of names. There is going to be a day where this gets a nice pump. I truly believe that CRM, this is a name that we talked about a while ago. Do you guys remember that right here? I think it gapped up. It unfortunately had this gap down, but it did start to rally. This is going to be a name that we're going to watch because, well, of course, I think a gap fill is still in store. So any, strong close up back towards that high, maybe around 260, 189. This is going to be something that's very interesting. But I would take this one long above then. So we'll be watching CRM as well. Let me see what you guys got. Bot and CMG both could be heading to the 20-day. CCL tomorrow, $17 could work. Yeah, CMG Chipotle is interesting too. With this one, a lot of momentum on this one. A lot of people that I know are betting big on this one as well. But we'll have to see with this one. I think this one is certainly a momentum trade. I mean, of course, I wouldn't enter now, me personally, but since I'm an options trader. But if you are an equity trader, which it sounds like you are, Mr. Michael, this is something absolutely you want to keep watching. Now, Starbucks, speaking of kind of these names, Starbucks is a name that actually flopped in the after hours. Check this out. So the earnings, oh no, it actually did go up. Okay, so this one's not bad. But Starbucks is the one that Sean and Neil and I were talking about. He liked Starbucks. I liked energy, which XLE, this is what we're going to be talking about. Another name that you guys want to be watching, okay? Now, we talked about this one as well, is XLE. Now, I'm going to show you the game plan for XLE. This is what we've laid out, okay? So, our game plan for XLE is going to be, if tech fails on earnings, pick up these names right here, okay? This is the inflation trade, all right? So this is XLE, XLB, and XLI. These names right now, as it stands, are going to continue to receive a rally. So this kind of plays along the XLU, but XLE, I believe, is going to receive a significant pop, all right? So you need to keep playing the continuation in these names, XLE, XLB, since tech is starting to get clapped on earnings. Especially if Apple collapses, this thing is going to rocket. With XLE entering the momentum zone now, it is likely, with 80% accuracy, going to close above the expected range this week. So continue to long XLE into the end of the week. Now, you could scan within XLE to see which tickers are outperforming, which we can do that right now. And it looks like SLB. Okay, we'll check out these ones. Potentially SLB. What about Oxy? Oxy as well. So guys, two names to watch. SLB. Oh, my bad. You can't see. Two names to watch. SLB and Oxy. Check out this one. SLB. Get rid of this. And I'll read chat in a second. My bad, guys. I'm kind of falling behind a little bit. I'm so locked in. SLB. This one is interesting. So this one could have finished selling to the downside. It appears this could be the spring. This could be max pain. We could, if we get a close back into here, I say anything above 48 is something I would be interested in. Okay. So we'll mark this out as a trade. This will be a stream pick. We'll make this level specifically. All right, let me read what you guys are saying. I mean, GPS bounce off 21. Uber, S by X report is why Starbucks is up. Yeah, a lot of names you mentioned, Michael. Like GPS. I typically don't trade those with options. Just the spreads are bad since I am a derivatives trader. But equity, absolutely. A lot of those cheaper stocks, they do have higher betas, of course, and offer some great opportunities for you equity traders. My longs are on Uber, have been paying, but September dated, so still okay. Awesome. Okay, yeah, I'll let you know what Uber. I'm thinking on Uber. But as far as this one, this is going to be SLB to the upside. We're going to get an entry here, target here, and then ultimately here. I think 816 is a fair contract for these. If this does cross tomorrow, 809 would be the better pick. Okay. So this is going to be SLB calls ATM 809. Okay. So that will be that. So someone screenshot this, and we'll talk about this one. I'm like paranoid because I don't have autosave on. Okay. So I don't want to delete any of my charts. Okay, we'll keep that one. And then additionally, Oxy. Oxy is going to be an alternative energy name, but this one looks stronger, to be honest. So with this one, what I'm going to be betting on, since we didn't make a new low, the long trade is right here. This is also going to be Oxy calls ATM 809. Okay. 809 or 816 we should add. Okay. Targets for this is pretty simple. Target 1. Target this one is the second. Okay. So those are the two trades there. Could work off $40 area. So actually on, yeah, interesting that you bring up banks, Michael. There was a hedge trade on Citigroup. So I believe there is going to be somewhat of a temporary bounce into the end of this week. But I think you're right in saying that $40 is the draw. I think we are going to get a pull down here. And again, that was this order right here, this hedge order. It will likely force market makers to sell this off, either office strike or instantly. So this is C. I think this trade gets a nice nice drop somewhere here. So this is going to be the key trade for this to the downside, and that will be targeting down here and here for 809. So this is going to be Citigroup to the downside. Does that make sense? Let's see what you guys still holding XOP. So with the XOP OIH trade, this one I actually did exit the XOP. However, I had 816 contracts, so I kind of got screwed over on those ones. Just I didn't want to deal with it, the chop at the time, energy. But if you were to re-enter these ones, or if you are still holding, I would absolutely hold. I think energy is going to continue to the upside. So XOP, OIH. I do think that XLE is also going to be a big winner. So keep in mind those names and continue to trade them. Rader, what do you think about UNH? I would not touch UNH. Don't touch the mega caps. And what I mean by this is the mega caps of this, like we talked about earlier, the UNHs, the Apples, the Microsofts, these type of names, they're not the names within. So UNH being healthcare. Healthcare is bullish, but only biotechs. You want to stay away from those larger names. You want to stay into those names that did not catch a big rally from the last rotation. So UNH did significantly benefit from the July rotation into healthcare. So what instead you need to be watching is things like biotechs, things like IBB, things like, of course, IBB being carried by that UNH, things like Moderna. These are going to see the bigger, more tradable moves. I think UNH is definitely stay away from that. I think it's not a name to get into. The risk to reward is just not there for me. Rader, have a question on why you guys don't hold your positions through earnings when you were shorting tech. Why not hold through earnings, and market makers are moving money out of tech for a reason? So you can hold through earnings only if a few things happens. Number one, we do trade earnings. We have multiple trade ideas in earnings. We've been trading earnings all this week. What it requires though is smaller capital to, you obviously can't go in trading 2K contracts on Nvidia right before earnings or something like that. But what you do want to focus on is, okay, let's say I swing into earnings. Like right now, let's say I bought puts for August 2nd and you see August 1st as the earnings. If you swing this trade and it works in your favor significantly, let's say you're up over 100%, size that position down to make the trade free. And what I mean by that is, let's say we have 2 contracts and you make 100% on one contract and the other contract is also up 100%. Sell one contract so that you make that initial position size free so that you can hold through earnings. Now, if the earnings is not on a stock that's necessarily anticipated, you can sell before, obviously. Take your gains and run. But a lot of the times, it is worth it to stick some position size into earnings if you did catch a move into it, such as earnings run up, etc. We did this a while ago on FedEx, this trade right here, and we this was 1,400%, I believe, on FedEx by the end of it. That we caught a FedEx trade. We caught the earnings run up, and we actually held some of our position size into FedEx earnings, and we got 1,000% on that. So you can absolutely swing through earnings. There's various strategies, especially if you're losing into earnings. If you're down 60% into earnings, you might as well hold through earnings, right? It could recover upwards of 20% or even make your trade green again, just because of the IV increase, the premium increase before earnings. Okay, so there is some strategies around that. Sorry, my question is frames badly because of limited text. But with earnings, you absolutely can, because it is news and it can go either way. You can absolutely hold through earnings, but only you can't just open a trade for earnings and expect, oh, let's say you see flow. If there's flow on option flow, like let's say I see a flow order right now on Apple or Microsoft. If I see a flow order on Apple or Microsoft and it's for August 2nd, I'm not going to really pay attention to it because I'm going to assume it's an earnings trade. If the contract expired before the expiration, or excuse me, before the earnings, then I would consider it not an earnings trade and therefore playable, because he's not expected to expire before earnings. Therefore, it is a valid trade idea that if it does meet the criteria and everything like that. Now, of course, if we do fall and he does work out, then we do have the option to hold through earnings. So that's that. I see. Okay, thank you, Rader. Yep, absolutely, man. What about Exxon and CVX in XLE? Those look super good too. Yeah, we can check those out. CVX, this one has earnings, so that's going to be a tough one. Again, I would try to stick to something that does not have earnings, just so you don't get clapped and you still, you still get to participate in the idea. So I like to stay away from earnings, especially overpaying between there. As far as, what was the other name you said? Exxon. XOM, that's right. This also has earnings. So I would not participate in these names. I think XLE, again, since it does not have earnings, XLE could still benefit from the XOM and from the CVX pump. But I do not think that, especially as an options trader, again, this is just me, I don't like taking that gamble at earnings, because what could happen is XOM or CVX shits the bed, but XLE holds because it's not going to affect the overall energy sector as much if Oxy starts to pump, whatever. So I do not typically like to play into earnings like this, but what I would like to do is get a sympathy trade, as they call it, which is something like XLE, and this, because it is an ETF, doesn't have earnings, makes it an alternative exposure trade without having to worry about expensive contracts, without having to worry about premium or theta decay, and without worrying about IV increase, all that garbage. Okay. Let's see here. Sal says, dude, friend recommended you. Love this angle about market activity. Definitely look forward to learning more. Awesome, Sal. Hey, man. Appreciate you coming here, and hope you're having a great night, man. I appreciate you typing that nice message. But that's that. So again, Citigroup we are bearish on. This was due to this mechanical order that came in. It's a hedge order. Again, market makers are going to likely push against this. I think given the current momentum of C, we have to be patient on this, and therefore I don't want to say look for a head and shoulders, but it might end up looking like one. Okay, so this one, I think a fair short would be off 66.59, but again, we want to see this slow down. So if tomorrow we start to show some weakness, I think it's best to start to size in with 1/3 position size, like that. But again, the markets are anticipated to go to 552 this week, most likely. It might be a little under, but I still believe that the upside trade is going to be the better one this week. given the current flow in the standards, okay? How about XLP names? So within XLP, I'm still long KO for the 15th. This was on the Rader Report. If you guys caught it, shout out to you. We were looking at this one right down here around the 17th of July. Again, you'll notice, wait a minute, Rader, wasn't the 17th of July when the market started to break down? Yes, that's why we long. Defensives get that rotation as the overall markets drop. That's the whole purpose of defensives. So this right here, I grabbed 815, excuse me, 815th. August expiration, and I think I'm up around 350% because I started to add throughout this, so TOS doesn't give me the actual percent from the initial contract. But as far as this, yes, 350% total on my position. I'm up. Actually, I might have to go check that. Let me go see. Yeah, so that's what I'm at about right now. Sorry, someone's sending me a text here. Let's see what else you guys got. But as far as XLP, KO was my favorite within staples. I think the extended opportunity is an XLP with PG earnings. So if you go look at this, PG did report earnings, but it is starting to buy it up. And again, for whoever asked about the energy names, so this is a great lesson. So PG, of course, being a consumer staples name, this is why I don't like to long into earnings. Because if you were to long something like Procter & Gamble, like let's say I'm bullish on consumer staples, and I go to Procter & Gamble, and you choose to long that one for a bullish consumer staple trade, but it has earnings right in front of you, this shit can happen right here. Although XLP is still, it gapped down off of that, you got to pick the winners, the names without earnings. And in this case, I longed in KO. I know it was a few days before earnings, but it was like a week before earnings. So I did long this one. I ended up actually holding through earnings at the time because I was in the green. Like we talked about, I trimmed some of my position to make it more free, take less risk, and I'm actually still holding this one. So this is why you have to kind of dance around earnings. You have to be smart about it. You have to pick the favorites. KO is the favorite of the staples. Do I think there's any, more opportunity in it? Likely not. But this is the name that I picked. So pizza. When football season starts, the college students will order pizza for those games. Yeah. I mean, I was a customer at pizza the other day, man. Pizza. What about, that's Papa John's. What about, Domino's is DPZ. Dude, this one got shit on. But yeah, a lot of these different consumer staple names, even like Target. Target is one that's interesting. This one has been in consolidation for a while. And if you want to look for a long, watch this, guys. Okay, there's a rule. 2 weeks before earnings is typically when you get the run up. So if 2 weeks is 14 days, that would roughly be about the 5th. So we are a few days away from Target starting to get an earnings run up. So you need to start looking for a breakout setup in Target. Okay. Tell Warren Buffett you'll hit him back later. PG got murked. McDonald's. Is McDonald's even in consumer staples? I don't think it is. I mean, yeah, this one's breaking out. I don't see much opportunity in it though.
Rader, you got no audio.
We're back! All right, how long was I muted? Be honest. How long was I muted? Be honest. So, how long was I muted? Be honest. Wait, am I... Oscar, am I in the Discord? I literally am. That's hilarious. MCS. Yeah, McDonald's, I think that one's still strong too. Especially with it being so beaten down. The beaten down names are going to continue to get that rally within the like, that's the same idea with XLU and XLP, that the names that didn't get the initial rotation off the value and defensive rotation are going to start doing really, really well. Since the stream started. Okay, shut up. So what I was saying, guys, just to recap of all these trades right now, right now C is a downside trade. Don't rush it. We have this is expected to play out next week, but we do think that there's going to be an entry later this week. I think, again, we're going to wait for this to slow down, but anything into 67, I believe, is a fair short based off of this hedge order. Additionally, we do have, honestly, dude, I was looking at BA into earnings. This one could be worth a gamble. Wait, is this Wednesday morning? Oh, it is. Never mind. But as far as what day is it? It's Tuesday. But as far as everything else, we also do have a trade in, what was it? What was the other trade? I think that was it, right? Was that the only trade we talked about? Let me see. Oh no, we also had CRM. So CRM, this one's interesting. So again, we're watching CRM at 261.85. And then we also do have some energy names. That's right. So we're going to be watching CRM around this level right here. So this is going to be CRM. And again, we're just going to target this one for 8-9 calls. And this is going to be eventual gap fill trade. That's all I want out of it. Okay. So that's CRM. Again, that's going off of the rate sensitive name. That's going off of these names catching another leg higher. Additionally, I do think IWM has another leg higher in it, guys. It might not be until the end of the week, but I believe, again, we have to watch this one intraday. I have my entry being at 224.95, this golden zone. If it does break back into this zone, there's a 70-80% chance that this does break the expected range, so it's worth holding. Okay? Now, additionally onto that, we do have energy. Energy, I believe, is going to continue to see it follow through. I think any dip buy trade tomorrow is going to be worth it. If you tank off the morning, start to slow down, and then right into around Euro close, 11:30 EST, you should start to see a rally. Or if we just get off right the get-go, 1/3 position size off open for 8-2 or 8-9 calls. I believe this one is going to go and break the expected range. Okay. Another trade along that energy idea. Now, I did say that energy name, but what I'm really, really wanting to watch is Oxy, which is at the money 09, 816 calls. This is the setup on those. And then also SLB, be watching this one over, oh, look, it looks like we're already into the zone. So tomorrow it open around 47.83. I think SLB will be a fair trade to the upside. Okay. Are we all clear with those trade ideas? By the way, when I was muted, I kicked my audio cord out of my like GoL XR, whatever that thing is, the audio terminal thing. Now, as far as other trades, XLI, these type of names, I'm actually not really looking forward to trading these. So XLI, not really interested. I don't care. I think majority of the trades have already played out. I attempted a trade on DE earlier this week. Did not go so well. But with this one, again, I think there is another leg higher in these industrial names. But do I want to participate in it? Probably not. What's up, Prath? How are you, man? All right, with that being said, it is now your lesson of the day. Now, we've talked about a lot of different things tonight. So if you aren't already subscribed, please subscribe. And if you haven't already subscribed to the Rader Report or gotten serious, either way, whether you pay for the Rader Report or not, it is absolutely free to sign up. Are you serious? None of my charts are posted because the images are glitched. Oh my God. Okay, well, tonight I'm going to update the charts. But every night I do update a chart for SPY. Now, it's glitched. I cleared the cache. I have to go back in and change this tonight. But as far as this, it is absolutely free to sign up. You get a daily updated SPY chart and a thesis about SPY. Okay? So you get my SPY chart dated. It's absolutely free on the raderreport.com. Link down below in the description. You can make an account. It's absolutely free. Okay? Now, if you do actually want to take it more serious, I do post a monthly report on here as well as a weekly report. This gives the trades, the entries, the data, every perspective that I hold, and directional bias. This isn't some after the fact kind of BS. This is forward looking. I'm giving you data for the future and where I believe the markets will reside, even seasonal timelines. If you didn't see our seasonal timeline last month, we absolutely nailed this. So once you guys understand market mechanics a little more, you'll know how to time the markets better. And part of that is understanding seasonal. So you can see like 715, markets rally, longs, mid to small caps. Selling pressure, 722 to 726. This is all planned. All this shit is absolutely planned, guys. And of course, the 29th through the 31st, we expect buying pressure, which is exactly what we're going to get tomorrow. Okay, so this is QQQ XLK. So you guys will learn to be able to plan the markets out in this day-to-day detail once you kind of understand this stuff. All right. All right, ladies and gentlemen, with that being said, I'm going to throw a poll up. Thank you to Mr. Evolving Finance again for the $100 donation. Roll with the big boys. We are going to say Q&A. We are going to do a startup poll. Now, we're going to, what lesson do we do tonight? This is going to be a 10-15 minute lesson max, and then we'll get you guys out of here. We'll do okay, let me think about cool lessons we could do. All right, ladies and gentlemen, there is a poll in chat right now. We are going to begin our lesson time shortly. So please do vote for that while I go get my food. Okay? This will be our lesson time for tonight. VGR, MO, and BTI all doing good with dividends. Yeah, it sounds like, Michael, it sounds like you are a profound investor when it comes to equity. I typically don't trade. Again, I mean, outside of MO, I think I've traded this one in the past. But these names I typically don't, I just don't make trades on. A lot of these cheaper stocks, low beta, contracts are kind of difficult on them. They're widespreads. But absolutely, yeah, MO is one that I'm looking, I traded that one in the past. Excuse me, VGR, yeah, these all have earnings. If you're a long-term holder in these are good. These are good. Dividend stocks will do really well in 2025. So be looking at those ones. All right, let me go get my food real quick. All right, I'm back, guys. I just got back from Wendy's. Let's see what I got. My house. I actually live in a Wendy's. That's how I got this so fast. Oh my God. Everything looks so bright now. All right. We'll give it one more minute. Cast your votes. I got mouse surgery the other day, by the way. That's why I didn't stream on Monday. It's a wrap. It's a chicken wrap. I'm actually interested in BA earnings. Michael, that's one of the companies I was really hoping forward to trading into, at least through after earnings. I think that post earnings they're actually going to get a huge run up, or during earnings, because of how much negative news is already priced in. I think if they give anything of some positive guidance, you're going to see a pretty good, whether it's earnings or not, just company related. You had that massive tank due to the initial like grounding of the planes, and then you had all the lawsuit stuff. But I think all that is already priced in, so we'll see what pops out of earnings. But I'm definitely bullish on Boeing. How much for mentorship? One-on-one. So I don't do one-on-ones, but you can absolutely just join our Discord, man. That's as close as you'll get. We're in there all the time. We're talking with people, doing lessons, activities. There's PDFs, things like that, if you're into that. Here it is right here. So we do a lot of activities, tons of data, tons of PDFs, things like that. Lots of stuff to download here. Hours, tens of hours, hundreds of hours of content. My mentors and I are in there. How much for a one-on-one with gloves on? Randy, I would absolutely take your soul. We got the wraps, baby. All right, guys. So you chose tonight's lesson to be better entries and better exits. So tonight we are going to talk briefly about how to get better entries. We're going to talk about the concept first, the classroom information, if you will, and then we'll apply this practically. So better entries, and then we'll talk about exits. So let me take one more bite, and then we'll get started. Do you update your open positions on Discord? Ray Hustler, we do post our trades, but bro, if you're just trying to make trading about copying, then you're never going to do well, man. This game's harder than most, and if you find not enough time to do anything but copy, don't even get into trading, man. Trade because you love it. Trade because you actually want to be good at it. Don't trade because you just want to make money. Okay, so as far as this goes, guys, better entries. There's a few different things in the market that we have to consider when it comes to entries and exits. Number one, the purpose of a good entry. And number two, of course, what is a good entry and what does it look like? So first of all, we have to talk about the purpose of an entry, okay? So what is the purpose behind the entry? And we've talked about this before extensively, but if you guys want to get a good entry, you have to know the purpose behind your entry. You have to know what you're actually getting into. And that sounds very vague, but it has to be vague. So let's give some more examples to maybe help narrow down this concept. When you enter a stock, when you buy into a stock, you have to know exactly what you're trying to get out of it. There's different ways to do this, but this is why I highly encourage you. The easiest way to make sure that you're always doing this right is find a trade outside of the price charts first. And what I mean by that is go look at the rotations, go look at the RG charts, go look at the seasonal charts, go look at the option flow, go look at another news piece, something that you think you can front run. These, once you get an idea, an edge in that justifies all price action. Okay, and that is you need to identify the purpose of that entry. So, for example, if we were talking about Citigroup here, the purpose of this entry is to catch a move from a hedge order. In my knowledge, hedge orders are often quick. Hedge orders don't typically receive a extended move beyond their expiration. So right there, I've already established somewhat of a purpose, that I'm betting against them, that it's going to be somewhat of a quick move, and that I do have targets for, which we'll talk about in the exits. But I do have a general purpose. If you are entering, and you enter a stock, and you don't know what you want out of it, then when things hit the fan, or when things go deeply in your favor, you're not going to know what to do. When you enter a trade and you don't understand necessarily the purpose behind that trade, even if you're right? Let's say I enter Boeing and Boeing skyrockets, but I had no clue why I was entering. I just bought. If it skyrockets and goes 400% and you sell, it could have gone 10,000%, 20,000%, that contract. But because you had no idea what you were doing, you sold early, you just took your profits off, and that's it. Right? When you have a purpose behind a trade, you do better because you know when that purpose is fulfilled and when that trade enters the late game of the trade, which I call it, which is the final stages, the runners, the contracts that you forget about and hold. That is the purpose. So when it comes to this, I know it's very simple. You guys are probably already bored, but it's extremely crucial to understand the purpose behind your entry. If your purpose behind your entry is price action related, you're likely not going to see any purpose behind it. So I would say everything outside of price action, right? That is the purpose of your entry. Now, of course, price action matters, but we'll get to that. But I don't want that to be the sole purpose of why you're entering because you see big green candle. All right? Cool. So outside of the purpose, how do we actually enter? Well, I'll give you kind of my formula here. So when it comes to entering stocks, this is how I typically enter my positions. Again, since I am an options trader, I relatively have a big account. So what I'm going to do is this. If you have a small account under 10K, I would recommend just trading one contract per trade. But when it comes to this, what I like to do is initially enter with 1/3 of my allocated position size. So typically around trades for me are between 1 and 3 grand, okay? Depending on whether it's a longer dated swing trade or whatever. But for most option flow trades, I put upwards of 1,000 on it maximum. So if that's my plan, then right off the bat, I'm putting $300 down on that trade when it does hit my entry, okay? Which we'll talk about in a minute of what is actually a good entry level. But initially, I hit 1/3 of my entry level. Why do I do this? It's because when I first get into that position, I need it to show me that my idea of why I entered is correct, okay? And that's why I enter with 1/3. And I'm going to add a note here to add when proven correct. Do not average down. Now, a lot of you guys believe that averaging down is the way to invest. While equity traders may do that differently, I'm here to tell you that I'm an options trader and therefore we have to time the markets. So if the market is not going in your favor and it's clapping you, let's say you enter 1/3 of your position size right off the bat and it starts to go way against you, don't average down. Why would you average down if it's not proving you correct? That's like your girlfriend cheating on you and you saying, hey baby, good night, I love you, let's go out on a date tomorrow. Bro, if she's not loyal to you, why do you keep dating her, right? Oh, geez, I mean, some people like that, but but not this guy. Do not average down, because if you are not being proven correct and your idea is not valid, don't average down. I can't stress that enough. So when my initial entries are typically 1/3 of my position size, and I typically add into target 1. Now, why would I add to my position size? Add target 1. I will typically add in target 1 because if it hits target 1 and starts to and it remains strong, it is more likely than not to go to target 2. That's how liquidity works. Once you break out, once you start to make a move, if you hit target 1, you're more than likely to go hit target 2. Okay? So typically I'll add a lot of my position size, if not into right before target 1, my full position size. All right, that's typically how my trades go. And what this does is it reduces your losses to very minimal amounts, but it leverages your winners. Traders, if you saw my video on Instagram today, you'll know this. Good traders are not great. They're not better than you because they're right more. They are better than you because they leverage their winners more and are hit by their losses less. Every single one of you. And I want to point at yourself when you're talking about this. Even myself, when I was first learning, I did all this stuff. You let those one big losses take away all your winners. And you might get upset, but you might not realize that it's not actually your losers that are always the problem. It's just that your winners suck. Your winners are so mid, right? We need to be able to leverage our winners so that when we do have losses and we do make mistakes and that our systems do not work out, that you do have a kind of fallback, a cushion, an ability to leverage your winners, okay? So that's that. All right, is this making sense with everything? No Diddy. This game is the harshest game you'll ever play. That's right. That's absolutely right. I need to be spoon-fed? Because she got the gat. All right. I can't. Okay, outside of that, that is entries. So the last part about what we're going to talk about with entries is when do you enter? Okay. Now, this is speaking from an options trader. Okay. Now, I do want to add one more thing right before the end. You do not always have to enter 1/3 of your position size. If you trade around $1 contracts, and I'll post that just right here. Typically shoot for $1 contracts at the money. Okay, this is my typical entries. I try to shoot for stocks that are around $1 contracts. Of course, Apple, $2 contracts, whatever. But traditionally, I do try to shoot for that $1 to $2 contract. That is kind of the sweet spot. Again, for more expensive stocks, you're going to have to pay up. But with majority of stocks, the $1 within expectations is typically where I shoot for. Okay, at the money, somewhere around there. All right. But as far as what I want to add, if you do have a smaller account, you're not always going to get the luxury of adding 1/3 to start with, right? Because if you can only afford one contract, just do one contract and trade that, hold it a little longer than you're used to. All right. So when do you enter? You enter at pivot levels. What are pivot levels? Okay. Well, pivot levels are when the stock is at an area where the market makers are forced to move. If you guys look at my charts, how I chart things, you'll notice that on every single chart, I do have a pivot level. This is the golden zone. This is where markets are forced to move. You can see the golden zone for this week was around 547. This is where markets are forced to move. They're forced to make a big move off of, and this is because they can't really chop there all that much. It's an area where you want to be involved in the markets. These golden pivot levels are on every single one of my charts, XLP, etc. Again, come up to here, big gap down. Okay, so this is where markets are forced to move. With that being said, you want to enter at a pivot level. Now, what does a pivot level look like? A pivot level is always going to be some sort of consolidation where you see a liquidity grab and a close back in. This is a pivot level because it's forced to move. You've taken out a range. There's no more trapped ranges. There's no more liquidity left in there. Therefore, it's forced to move. Pivot levels could be that. They could be something like up. The most common is up, down, close in the middle like this. So something where you move up, you close halfway in between, something like this. This is a pivot level because, well, they have to either take it to the high or the low because there's nothing really here. There's no liquidity that has formed in here. Okay, so something like that is probably the most common structure. You have to enter at pivot levels. If you look at something like Oxy, you'll notice that my entry on Oxy is right here. Now, why would my entry be on Oxy right here? Well, because you've taken out a new low. This could be a market maker cycle. You have a spring, max pain, but you've taken out a low. You come back into the range. That means that there's no liquidity left in here. So this level right here is going to be the make it or break it level. You've already tagged this a bunch of times. Remember our liquidity water and hole principle, that the more times you touch a zone, the weaker it gets, right? So this area is a pivot level. Whenever you have some sort of range, you have a drop down and you come back into the range, this is a pivot level. So you always want to be looking for those pivot levels. Now, don't confuse that with the stupid indicator. There's an indicator called pivot levels. It's stupid. Don't use that, all right? We do have an extensive video over pivot levels and how to spot them. But for the most part, they are things like, you know, pump, close in the middle, something like that. Are you risking entry contract or like a certain percentage of your contract? Good question. That's going to be in the exit section, which we're going to move on to next. So this is entries. You guys should get a better idea of how that is. I typically enter 1/3 position size, add into target 1, and that's how I'm leveraging my big winners. Okay? All right. Now, as far as exits, day trades, exit around 35%. Okay? So typically my day trades, where I trade on the same day and I sell on the same day, I typically exit around 35%. Why? Whether it's a same day contract or not, typically that's when things kind of shit the bed. Okay? So I found that 35 to 45% is typically where you see the contract become unrecoverable for 1 day's period. All right? Now everything else, now, this is going to be a very, very important concept for you guys, okay? And I want every single one of you in here, the 25, 30 people who are watching this right now, to lock in, okay? Never sell unless the trade idea is invalidated. And this is me from speaking as an options trader perspective, but also in an equity perspective. Let's say right here, my purpose of my entry was a breakout. I had option flow, something like this. In the contract, and I enter here, and it starts to chop, okay? And I still don't have a breakout. But it has not violated any major levels yet. It has not changed. The structure of the market has not changed. Or that the news is still on the horizon that I'm looking for, right? So therefore, don't exit. If I entered here and it just does nothing but chop, because there's theta decay, I could be down 60% here. That does not mean sell, because the idea of the trade is not invalidated. Now, it is a skill to determine what is an invalidation or what is not. Sometimes timing is an invalidation of the trade. For example, you could be trying to play, let's say, a sympathy trade on, let's say I'm long Nike and Crocs reports earnings. And I enter Crocs or Nike and Crocs reports earnings, and 2 days after Nike doesn't move, that could be a reason to exit, because my whole idea behind that trade was to see a sympathy move, to see, okay, them rotate into Nike because something happened in Crocs. There is timing that affects this, but in majority of cases, you do not just sell because your contracts are down. That means you're trading your contracts and you're not trading the markets. You guys need to trade the markets, okay? Sometimes you'll need to reposition into longer expiration, whatever. But do not sell because your contracts are simply down. My biggest trades, in fact, probably the 3 out of the 5 biggest trades I've ever had, Home Depot, LabU, Activision, gold, and I'm forgetting one more. These trades that have all go 2,000, 3,000% for me over. The biggest trades, both in percent and dollar amount I've made, I was down probably over 50% on to start with. You cannot trade your contracts. You have to trade the markets, okay? So just understand that. If the idea is still valid, then that's it. Now, let's say expiration was right here, okay? And it's 1 day before. There's no news. I'm down 60%, and it's only 1 day left. It's probably worth selling because it takes a miracle. The trade idea has changed, because although it hasn't broken out, you're so close to the expiration that you need a miracle for this to work out, and that's not likely because you weren't betting on a miracle when you entered. So that's a reason to sell. But what I'm trying to get to you guys is, do not sell just because your contracts are down. With options, people who set tight stop losses, you'll see mofos. Every Discord mofo on Twitter flexing right now, they'll have $1.20 contracts, and then it goes up to 132, like 12 cents. It goes up 10%, and they're already alerting their Discord. They're like, fire trade. Taking profits here, guys. 10 cents? You're trading options for 10 cents? No, you guys cannot do that. They're not trading the markets. None of these guys trade the markets. None of these guys have seen a 14,000% trade. Why? Unless if it's like earnings or some BS that they got lucky on. Because they sell just because they want to. And this goes for in profit as well. You can't just sell because you're up. You have to sell when the idea that the trade is in jeopardy or it's changing, right? So that leads me to my next point, which is going to be sell into weakness, not strength. Upside, downside, sell into strength. Okay. So, when you're a trader in the market, you need to understand one core concept. That when you go to take profit and you go to reward yourself for your decision, a lot of you guys get that habit, right? Every single one of you have had that trade where you're like, damn it, I missed out on so much. You exit and you see it just flush down. Because you're selling too early, because you're not selling into strength or weakness. So if I'm in calls, I'm selling into weakness. I'm not selling into strength. If the stock continues to rocket, I hold. I might even add. Shit. You do not sell into strength. You sell into weakness. Once that starts to slow down, once you start to see a trending parallel upwards, this is a sign to sell. This is a sign to trim. This is a sign to reduce your risk because it's slowing down. You do not want to exit your calls on something that looks like this. Just because you're up 100, 200% and you can go post a screenshot. All right? Is that clear with everyone? We're not deaf, bro. Don't yell. You are deaf. You're deaf to these facts. But that's that, okay? So when you go to sell, do not exit when the trade is going in your favor. You want to sell in weak, you want to sell in strength. You wait for that trade to start slowing down before you exit. Sure, you might lose 30, 40, 50% off of your contracts. You might be up 200% and you then hold longer and you're only up now 170% or 150%. So what? You held for the option, the opportunity that it was going to go to 400, 600, 700%. All right? So that's that. Okay. And finally with exits, here's what I like to do. I'm a trim trader. Or I'm a trim. Actually, you guys already know that. But when you do exit. Now, as far as how I like to do things, we're going to talk about end game. Okay? So when a trade enters its end game, what does that mean? It means it is extended beyond all standard deviations. Or it's meet the entire criteria. So, for example, something like C. Okay, so let's go back to actually BAC. So something like BAC, which I traded back here. This trade right here was pretty damn nice, but there was an end game to this trade. Now, I believe I got the 8th expiration here, or 9th, or 15th, something like that. I forget what I got, the 12th. I think I got the 12th expiration. So with something like this, when you start to see this right here, okay, so I see huge pump, sell-off. This is when I trimmed my position. Okay, so you want to trim into weakness. You want to exit into weakness. But I didn't cut my entire exposure because I was still green. Now, you gapped up the next day, and then you started to rally into the following day, the Tuesday. I actually added again. All right. Where I started to exit my position was in the end game of this trade. When you start to near so close to expiration that the odds continuously tip in the opposite direction, that there's going to be more juice out of this. Okay. So for example, the closer I get to expiration, the more the closer I get to end game. So the more I get closer to an expiration, the more I'm thinking about selling. Why? Because you're going to be more susceptible to theta decay. You're going to be clapped. Any move against you is going to take a lot more than it was a few days ago. Okay. So you need to be cautious of, as you're nearing that expiration date and you see a slowdown in trend like this, you need to be selling some contracts. You need to be making this more risk-free, even if you can make all of it risk-free and leave some runners. Okay. But if it's still strong, like it is, still deep in the money, there's no reason to sell the entire thing. So you need to be focusing on the end game of a trade. What does that look like? It's often a slowdown as you near expiration. Okay. That is the end game of a trade. The beginning half of a trade can be pretty wild. It's sporadically against you. It's things like that. But again, that's why you understand your entry, the purpose behind it, because that will help you not sell too early. Okay. Ray Hustler says, LMAO 10 cents? Yeah, literally, dude. I needed to hear that. Let's go. Okay, so an end game of the trade. The end game of the trade is when you reach a point where you see you're nearing expiration and you have to continually assess yourself. When I post targets, guys, they're not, oh, I exit half of my size here and I exit all here. No. What these are checkpoints. And this is what all liquidity levels are. These are checkpoints to see, is the strength here still strong? And is it worth holding? Okay. So when I saw target 2 and I see this massive boner green candle, you think I'm selling? No. Because this is strength. I don't sell into strength. I sell into weakness. I sell when things slow down. All right. That's when you exit, because you will never hit these big winners if you're selling into strength. All right. Now, as you get closer to expiration, right? This is the trade idea entered was off the hedge. We want to continue to see a bullish move. Right here, I'm not going to lie, I was sweating. All right. But we saw a gap up the next day. I was still deep in the money, so I thought, you know what? It's still worth holding. And I kept my long exposure. So then we start to move up. As we near expiration, the idea of the trade is changing. The idea of the trade is changing. Remember, I say only sell when the idea of the trade becomes invalidated or changes, at least from your initial entry. So again, the idea of why I entered was based off the flow, the BAC flow that I put in the Rader Report. That was a hedge trade. We're betting against it. We were getting calls to the upside. So as this starts to get closer to expiration on the 12th, which I had the 12th contracts, I think, let's actually go look at this trade, shall we? One second. Let's go see what I said here. How about if you see more flow? Wolf, that is absolutely a reason that could change the idea of the trade. Okay, so look at this. Okay, so this was my trade idea. So yeah, I grabbed 712 calls here. Okay. I thought this was the safer one. So 712 was what contracts I got on this one. Okay. So I followed with 712. And so as we near 712 and we start to see a slowdown, you start to see gaps like this, the idea of the trade is changing. Now it's not the, oh, it's going to start being bearish now. No, it's that as we get closer to expiration, it's becoming more and more likely that, or it's becoming less and less likely that we see any more juice squeezed out of this, right? So I'm selling contracts here. I'm cutting my winners. I might leave one on the table because, again, it's still deep in the money. It's still strong, but it is slowing down. And I want to reduce my risk. So that is the end game of the trade, is as we near expiration, you have to ask yourself, do I need a miracle for this to work out? If it's a miracle that you need to work out, it's likely to sell it. All right. So with this, I was selling into the 12th, and that's how you manage your risk. All right. So that's that. But yeah, that's your lesson, guys. Hopefully that was a little more informative. You guys said, where do you think the level of size where market makers determine to go against your position and when not to, like, what is the certain dollar amount? I don't understand varies in stock. Wait, where do you think that level of size where market makers determine to go against your position? It's between 200K and 2 million, but it also depends on what stock it is. So, a 100K order on, or a 200K order on Apple is not going to see the same response as a 200K order on BAC. Okay. But that's your lesson. So again, guys, focus on, and I would also recommend, guys, this is a free resource for all you guys out there. Go watch my Market Maker series. So this right here, which is playlists, go to this right here. This playlist has a ton of information into it. I'm going to be adding to this over time. But this right here, go watch this. This is a great video right here. Momentum. Okay, now this is when I got a buzz cut. God dang, look at this. Is this Dr. Egghead? Is this Egghead? Sonic Egghead. Am I Dr. Egghead? Like, is this actually me? No way this is me, dude. No way this is me. No way that's me. Okay, so this is when I got a buzz cut. But this right here, this video goes all about momentum. If you guys can understand the concept of momentum, your entries will be so much better. So definitely go check that out. I talk a lot about momentum, the importance of it, and even a trick with the indicator. But that's that. I hope I hope you got only paid 10K for that. So no, that was another 30K haircut. Remember, only 30K haircuts. But other than that, guys, again, if you guys have not already subscribed to the Rader Report, do so. You guys, it's absolutely free if you want to see the SPY chart every day. Again, I'm going to fix that right after this. It's glitched right now. But you can see my SPY chart every day, updated every single day with a thesis. But also, more importantly, you get access to the seasonal timeline. This is my professional game plans, how my mentors, you get the data. I make all this. You get the reports, which is all the trades, entries, everything posted every Sunday ahead of the week playing out. So this is not a recap. This is not a look what I did this week. It's actually look what I'm going to do this week. Here's all the game plans, the thesis in a professional perspective. I put my heart and soul into this and even have some institutional clients as well. So we're going to try to grow into something crazy. But we also do have the monthly report. This goes over a longer time frame. Over the course of the next month, these are the longer dated trades, etc. So that's that. But other than that, if you guys want to be more involved, you can also get involved in the Discord. Again, tons of education. My mentors and I, Zach is in there with me, as well as some other people. But we take this very seriously. I don't make any money from this Discord. In fact, we put all this money in a Stripe account and don't touch it. I've never been paid for anything I do in the Discord. So this is something that we do out of passion to create a better community, to create something bigger and better and more important than ourselves. But you guys can see our perspective in there, from the option flow trades we find to, of course, the earnings calendars, everything, course catalog, tons of PDFs, RG charts, data channels, things like that. We run things very professionally here. Lots of live calls every single day. So if you are serious about this, let me say this again. If you are serious about joining, it is $100 a month with the 50% off code. If that's something you want, do it. Don't DM me and say, hey, Rader, I'm thinking about joining the Discord. Can you send me the code? And then you find out it's $100 and you don't join. Okay? It's $100 with the code. If you're serious about it, DM me on Instagram. All right? Cool. All right. Other than that, guys, hope you guys all have a great night. We will probably be streaming tomorrow night or Thursday as well. I'm thinking Thursday is going to be the better night. I think tomorrow I'll just film I'll film a YouTube video tomorrow. But that's that. Because I have to go to the tuners tomorrow. I have to get my Mustang tuned. I'm having a problem with one of the air control valves. It's not a problem like a mechanical one. It just needs electronically tuned. But we're pushing some serious power, baby. 750 to the wheel. I hit 65 miles an hour in second gear yesterday. All right. I'm discorded. Yeah, it's Wolf. It's got a coyote with a whipple on it. Stage 2. In fact, let me I'll show you guys some pictures. The hell was that? I got scared for a second. I thought that was like a nude or something. So here, wait. Oh yeah.
The dash is digi, the schedule busy. My head in a hoodie, my shorty a goodie. My cousins are crazy, my cousins like boogie. Life is amazing, it is what it should be. Been here for 10, but I feel like a rookie. I tell her look up, cause it's snowing.
Also, even more of a flex. I'm not even flexing the engine in this, but even more of a flex is that I had the balls to post that the markets were going to drop based off the rotation at 10:13 on the 23rd. You know what happened? 10:13 on the 23rd. Uh-oh, guys. Raiders strikes again. All right, guys. Have a great night. I'm deep in the HB game. Let's go, baby. I'll be on maybe tomorrow night or Thursday. Probably not tomorrow, but we'll see. Other than that, guys, have a wonderful... I would like to enter Discord. I was there once and tried to enter, but I don't know what's happening. It won't let me in. Danny boy, if you... Our Discord is not free, but if you're serious about joining, it's $100 a month. DM me if you're actually going to join. Thank you so much, guys. Abstract, I still need to call you. When are you available? When are you available for a call, Abstract? Wait, no, I'm going to get copyrighted for that music that I posted. Oh! I shouldn't have played that. When are you available? Okay, so we're not going to talk? All right. All right, with that being said, guys, have a great night. Tomorrow, anytime, just let me know. All right, I'll see you guys then.